Right. Welcome everyone. So excited that you folks decided to take some time out of your busy schedules and join us this Wednesday. And also hope everyone was able to get outside this last Memorial weekend and enjoy it. And we are just going to sit tight here for maybe a minute or two. We just want to make sure that everyone can join the webinar this morning or this afternoon, wherever you may be located. So if anybody needs to, please feel free to go re-up on some coffee, get another cup of water. Again, we are just going to let folks roll in for just a second. And I am coming to you from my home here in Bozeman, Montana, where XYPN is headquartered. And hopefully, it is finally starting to clear up outside. I myself didn't get to get out and enjoy the Memorial weekend, but hopefully you did, Kendra. Did you have a nice Memorial weekend at least?
I did. It's been a busy week leading up to the long weekend, and so I got a lot of sleep this weekend. I feel like I really caught up on my sleep. Plus, I saw the new Top Gun movie, which was
Oh,
amazing. I
that's what
had,
I've heard. I'm really excited to go check that out. I've heard nothing but good things and can't believe we're already in freaking June already. So halfway through 2022, people. But glad to be here again with all you folks today. And we are a little bit past the hour. So I am just going to go ahead and kind of get us started today. And again, everyone, thank you so much for joining us. We're going to have a great presentation. And my name is Chris Johnson. I am one of the lead business development specialists on our XYPN sales team. And I'm honored and excited to get to host today's webinar titled Compliance Basics, Everything You Need to Know About Registering Your Firm with Kendra Rehm-Dehn, who is our Manager of Investment Advisor Registration. So there are just a few housekeeping items I do want to go over with everyone just briefly. So if you could see just right on the right-hand side of your screen, we do have several different tabs. The top tab, that's where our chat is going to be held. So please feel free to chime in throughout the presentation today with any type of commentary. And there is, right below that, a questions tab. So for you to specifically type in your questions, and Kendra is going to be covering those at the end during our Q&A session today. We will not be having any polls, so we are just going to be keeping it to the chat and then Q&A at the end. So again, please feel free to submit them live as Kendra's continue to go through her presentation today. And one last quick reminder before I kick it over to you, Kendra. We host these free webinars every single month. And next month, we'll be hosting on the second Wednesday, so July 13th. So please be sure to register for this upcoming webinar called Finding Your Niche, How Fee-Only Advisors Are Defining Their Focus, and why you should too. And this is going to be with our co-founder and CEO of XYPN, Alan Moore, and then a couple of our current members, Katie Brewer, Brian Thompson will be the other member. I'll hosting the webinar next month. And we will post a link for you folks to register for that in the chat. And I think that's going to be it for me for now, Kendra. So I will kick it over to you.
Awesome. Thanks, Chris. Welcome, everyone. It's my pleasure to work with you today and teach you a little bit about compliance. You're all here today because you're interested in launching your fee-only firm, and we are excited for this opportunity to show you that compliance isn't scary at all. As of this morning, our compliance team has registered 1,125 firms so far. I will give you just a little bit of background information about me. Like Chris mentioned, I am the Manager of Investment Advisor Registration, and I'm a Bozeman native. Prior to XYPN, I worked at a small community bank for 19 years, and then I found myself in search of a new career. I stumbled upon XYPN by accident, and I just knew that I had to be part of the team. My specialization is in registering firms at the state and SEC level. I am at 210 firms as of today. I've registered firms in all 50 states, including DC. Our compliance team consists of 10 people. Many of us are former regulators and compliance experts with industry experience consulting with both state and SEC registered RIAs. And our team is here to guide you through the process. I appreciate that many of you were able to submit questions early, so I thought I would begin our presentation by just talking about a few of the basics that I saw as themes in many of the questions. So right now, you are likely considering, should I register with the state or should I register with the SEC? So I'd like to talk to you about the difference between those. With the exception of one state, you will not be able to register with the SEC until you've reached at least 100 million in assets. There's one exception, and that's if your firm is located in New York. You will register with the SEC upon getting 25 million in assets. So most XYPN firms begin by registering with the state in which their primary place of business is located. And then as their firm grows, their AUM grows and the need to register in additional states grows. They may find themselves in many years needing to transfer from state registration to SEC registration. We are working on a handful of those right now with XYPN firms. One of the other common questions we received was regarding a minimum net worth or bonding requirement for your state. And this is very state specific. Some states will have either a minimum net worth requirement that you can meet with the assets of your firm, and other states will allow you to meet that with a surety bond. If you do have to meet the minimum net worth requirement with firm assets, that would depend on whether or not your business entity is an LLC or if you're a sole proprietor. We most often see new XYPN firms use an LLC as their business entity. And if that's the case, any assets that are needed to meet the state's minimum net worth requirement would need to be in a bank account in the name of your firm. If you are starting your entity and you're just going to be yourself as a sole proprietor, those would include your personal assets. And then what kind of experience and or exam and designation requirements are there? In general, most states will want you to either pass the 65 or have a combination initially of the 66 and the 7. Most states will allow you to be exempt from those if you hold any of the following designations: the CFP, the CHFC, the PFS, the CFA, and the CIC. There are a few states that also require that you have some minimum net worth requirement or some minimum experience requirements for the CCO of your firm. Most notably, those would be Minnesota and Connecticut. One of the questions submitted earlier was asking if North Carolina has an experience requirement, and no, they don't, as long as you have one of those exams or designations I just mentioned. A lot of folks are interested in learning about the biggest challenges that new advisors start when they open their firm. And I would say that that's the unknown. Having an understanding of the steps that need to be taken and the requirements for ongoing compliance are scary, and you just don't know what you don't know. So our team is here to help you. We're here to teach you about compliance, create your documents, and work with you to develop your compliance program. One of the other most common questions is, how much money do you need to start your firm? And that's a very, very good question. We generally recommend having at least $15,000 to begin your firm to pay for the startup costs and perhaps a temporary loss of income. We have a great sample budget tool that will get posted in the chat for all of you. So breaking down the process, today I'm here to talk to you about a variety of different things. The first thing we're going to talk about is assessing your current employment situation. Then we will talk about the timing for joining XYPN and preparing for registration. And then we'll talk about what you can expect when you go through the registration process with our compliance team. We will also talk about the creation of your ongoing compliance program, and then what happens after your firm is approved. So, as a solo advisor, compliance shouldn't feel like a burden to you. There will be some initial work in front of your registration to draft your documents, create your policies and procedures, but once those things are in place, it shouldn't be a lot of work, like less than an hour to a month. Certainly, as your firm grows, as you gain more employees, the level of supervision will grow, but initially, the hope is that it doesn't take too much of your time. So, right now, you're likely assessing your current employment situation. This may include reviewing your employment or other contractual agreements with your current employer. Many employment agreements contain non-competes or non-solicits. We also recommend reviewing your current employer's policies and procedures manual around outside business activities. Would it be a violation of the policies and procedures to begin the process of starting your own firm without prior approval? In most states, we can move through the process of beginning your registration while you are currently employed without your employer being aware of what's happening behind the scenes. We also recommend reaching out to legal counsel for help with navigating non-compete, non-solicit, and employment contracts. Next, you'll want to determine the timing for when you're ready to move forward. When you are ready to begin that transition, you'll want to allow plenty of time for initial registration. Getting your new firm registered can be done rather seamlessly with the help of the compliance professionals on our team. We begin the process by drafting your documents. This includes your ADV, your client agreements, and then a variety of other documents that need to be submitted to the state. We respond to the regulators on your behalf. Sometimes this can be a lengthy process if we work through a couple comment letters. And we also refile your documents and submit our response to the regulator for you. And while this process can be standardized to a certain extent, the length of time for getting approved as an RIA does vary greatly on your state. In most states, we can get firms approved in about 8 to 12 weeks, but there are states that can take a little bit longer, even a month or two longer than that. And that just depends on the work level of the state securities division, what their staffing is like, and the depth of their review. So once you engage with our team, I'd like to talk about what you can expect. But before you engage with our team, you'll want to have a clear idea of the services that you'll be providing, and then very importantly, how you will bill for those services. Most XYPN advisors begin by offering investment management and financial planning services, but you'll want to determine exactly what services you will offer, how you will deliver those services, and then how you want to be paid. Regarding financial planning services, there are a variety of ways that you can offer those. You may want to offer the ongoing retainer or subscription model, where you work with clients for an extended period of time. Perhaps they pay you a monthly or quarterly fee. You may also offer limited scope or single engagement financial planning services. These can be based on an hourly rate or just a flat rate, depending on how you would like to bill for that. I want to talk about ongoing financial planning best practices and regulatory guidance. As all of you know, the ongoing financial planning model is fairly new, and the level of detail required by most states for what they will require in your ADV, client agreements, and evidence of service varies. Many states have given guidance to the manner in which this happens, And I have some great guidance from Colorado, and it seems that other states are beginning to follow this same pattern. There's one regulator in Colorado, and he is planning to speak at XYPN Live this fall in Denver, so we hope to see you there. So, from Colorado, the regulator has said that for ongoing financial planning, financial planners must have clear deliverables and demonstrate that work was completed to earn a fee. Advisors offering financial planning services are a growing trend, and the model differs from the more traditional asset investment management services. Simply stating that the firm will provide continuous or ongoing financial planning services, or that the advisor will be available to assist clients when needed, is generally insufficient. The regulators want to see that if you are billing an ongoing fee, that you are providing a service to justify that ongoing fee. As an example, clear deliverables provided to you or provided by you to your clients may include a list of services that you and your client would go through perhaps on a monthly or a quarterly basis. It might include tax planning, budget analysis, cash flow, estate planning, a variety of different topics. And we have seen success when advisors implement a service calendar. We're going to link an article for you in the chat that was put out by Michael Kitsis. He really promotes the use of a service calendar as a way to demonstrate that clients actually get to receive something. I personally have a financial planner who's in the network, and at the beginning of every year, we meet and he gives me a service calendar of topics that we're going to go over during the year. It's a quarterly service calendar, and I know what to expect quarter by quarter when we meet. And it makes me feel good that we're covering all these things throughout the year and that my quarterly fee is actually receiving something in return. So you're going to want to start thinking about these things right away. And once you have some of those details in your mind fine-tuned, it will help you to move through the registration process a little more efficiently. We talked about financial planning services. We're also going to talk about investment management services. There are a lot of decisions for you to make early on. Some of those include if you are offering investment management services, who will your custodian be or your custodians? Will you be executing trades yourself, or will you also use an outside manager, sub-advisor, or TAMP? Will you have discretionary trading authority? Keep in mind, some states will have a minimum net worth or bonding requirement for firms who use discretion. A few other things to consider: how do you want to bill for investment management services? We're seeing more and more advisors have a combined service. Many refer to it as a wealth management service, where they bundle together financial planning and investment management services. Maybe they do a discounted fee or one fee for both services. Will you offer services a la carte? For example, is investment management related or available as a standalone service for clients who may not be using financial planning? Or will you require that a client use both services? How will you bill for your services? Will you charge a tiered, blended, or flat rate fee? Will you charge in advance or in arrears? Will you deduct your fees from managed accounts or also accept check or electronic funds payments? I also want to touch briefly on AUM and AUA. So in general, assets under management, AUM, is a defined and regulated term in the industry, and advisors are required to report AUM on an annual basis. We are seeing more and more advisors offer AUA, or assets under advisement services. And this is an industry term that refers to held away assets such as 401k plans or other accounts not directly managed by the firm, but on which you offer advice. So, after you engage with our compliance team, we work with you to draft your documents. We submit them to the state regulator on your behalf. We also create your client agreements and help you to gather other documents. This could be special documents off that state's website. It could be a surety bond, minimum net worth requirement, or various other attestations. In addition, during that time, after we've submitted your documents, while we're waiting for the regulator to review our application, we will help you to develop your compliance program. There are 4 key items that are necessary in your compliance program. So I just want to talk to you a little bit more in detail about what those are. First and foremost, all firms must have written policies and procedures in place that are reasonably designed to protect investors and prevent violations of the Advisors Act and be in compliance with state and federal rules. When I mention policies and procedures, you may be familiar with that term as the compliance manual. I'm guessing that for most of you, you will be your firm's chief compliance officer or CCO, and in that role, you are accountable for developing, implementing, maintaining, and enforcing these policies and procedures for the firm. That's where our compliance team will be very useful to you. We offer consulting and ongoing coaching services to help you in your responsibilities. And initially, the duty of the chief compliance officer, once your compliance program has been created, your duty will be fairly low. The biggest role in your duty is to supervise other advisors in the firm, and initially, you will likely be the only advisor in the firm. But as your firm grows and develops, your supervision responsibility will also increase. So having a tailored and well-documented compliance program early on will benefit you down the road. Books and records. Your written policies and procedures must be reasonably tailored for your firm and address core areas that contribute to protecting your client's data, safeguarding your client's assets, and ensuring you are acting in the client's best interests at all times. These policies generally describe your practices around advertising, trading, personal securities transactions, business continuity, disaster recovery, financial exploitation, elder abuse, custody, and billing arrangements. I know this sounds a little overwhelming. We do have templated language for all of those, and we can help you customize those to your firm's practices. Having a compliance program isn't enough. You need to demonstrate that you are following your own compliance program. One of the first things that the regulator will ask for in the event of an audit is your compliance manual, perhaps also your business continuity manual and your security manual. And they are going to go through that very carefully, and they are going to want evidence that you are following your own manual, that you're following your own policies and procedures that you've set in place. Your manual will also outline various ongoing compliance tasks. Those may include reviewing various documents on an annual basis or a quarterly basis, and also reviewing all advertising material, looking at archiving communications, trade errors, personal securities transaction reports, that kind of thing. And then lastly, there's supervision for firms that do have more than one employee, regardless of whether that employee is registered or not. As the CCO, it will be your responsibility to supervise their work, train them, and then document the supervision and annual training. All right, this is the best part of my job. When I get to make the phone call or send the email to notify an advisor that their firm is approved, this is just the best day because they are ready to go do the things that they're really good at. They want to start doing their marketing, meeting with their prospects, and working with their clients. Once you are approved, sometimes it can be a little scary. It's been a big buildup leading to this point, And now the regulator has given you the green light, and you're wondering, where do I go from here, specifically related to my compliance program? So we do offer a variety of services to assist you after your firm has been approved. Just like you offer your clients either project-based or hourly engagements to cover specific topics, our compliance team does the same. And then we also offer dedicated one-on-one coaching over an extended period of time. You will work with one of our compliance experts who will meet with you regularly, quarterly, monthly, to develop your compliance program, hold you accountable for your compliance program, and also be there as audit support if needed. We have a compliance task management program, or platform, I should say. This is included with your XYPN membership, and it's a software that is designed to outline the tasks that you must do regularly in order to maintain your compliance program. For example, at the end of every calendar year, you will need to fund your FINRA account. That's the account from which your state deducts your annual registration fees. And the compliance task platform will remind you that you need to add money to pay for the next year's fees. In the first quarter of every year, it's necessary to file an ADV amendment. That's where we update your total AUM, the number of clients you have, that kind of thing. That is included as a benefit with XYPN membership. And your compliance task management platform will remind you to do these things. In addition, we provide templates, regular blogs, and educational webinars dealing with relevant topics. Last year, when the new advertising rule came out, we had a few blogs and a presentation by two of our compliance consultants to really break down what that new advertising rule means for state registered firms. We also have weekly office hours. Those are held 2 times every week, and those are an open forum for advisors to bring questions to talk to one of our compliance consultants. Those things are all included in membership. And then there will get to be a point where your firm is growing, it's evolving, and you may need to hire new employees. You might need to register new advisors, but you will probably also need to register in additional states. So most states follow the national de minimis rule. There are 2 exceptions, so just tuck these in your head for now. The 2 exceptions are Louisiana and Texas. As far as the other states, you may have up to 5 clients in each of those states before needing to register. So we always recommend that as you are gaining traction in a particular state fairly quickly, when you get to about 3 clients and you anticipate moving to a 4th or a 5th client within the next couple months, we recommend beginning the registration process. And it works very similarly to the way that your initial registration happens, where we submit the ADV to that state and then we correspond with the state regulator. Sometimes that process can take 6 to 8 weeks, so we recommend giving yourself plenty of time to ensure that state approves you before you get that 6th client. All right, so I know we covered a lot of information today. In just a few minutes, we will go through questions in the chat and respond to what all of you want to know, I should say. I am just going to let Chris go over this slide.
All right, folks. So just want to cover the cost of XYPN membership here on this slide. And as you can see, here's our mission statement on the left-hand side. And we really believe that with the movement that we're doing, that we are helping our members live their great lives by just having that autonomy to build the practice of the way they want to build it, and ultimately serve the people that they've always wanted to serve and provide real value to their lives. So as you can see on the right, there's our membership pricing. So we say membership is advisor specific, which means that for the first advisor, it costs $460 a month. Now, we don't require every single person at a firm to become an XYPN member. We'll actually leave that up to the lead advisor, the principal advisor, to determine, who's going to benefit the most from having access to all of these different member benefits. But if you do want to add, subsequent advisor to your firm, or maybe an admin, paraplanner to your XYPN membership, their membership price is actually cut in half, $231 a month. So $460 for the first advisor, then all subsequent advisors, paraplanners, or admin, their membership is $231 a month. And as you can see, we're right at 1,600 advisors within the network, which is very exciting as we continue to grow the movement. Kendra, is that it from you as far as content before we jump into Q&A?
Yeah, well, I just have one final remark. I'm hoping that this information has been helpful to you all, and I hope that going forward you don't dread compliance. Our goal by the end of this process is to help you to feel confident and to empower you in your new role as Chief Compliance Officer.
Absolutely, absolutely. It can kind of start out as a black box, but we have a great team here to get you folks on the right track and then continue to keep you on that right track. So I'll jump over to this questions tab, and we'll just rattle off some of the live questions that were posted today. And the first one that's at the top of my screen is from Adam Van Ness. So looks like this question is surrounding policy and procedures, Kendra. So trade blotters, what's required and what meets those requirements? I.e., can I rely on the trade activity statements for my custodian? And I'll publish that real quick.
Excellent question, Adam. The short answer is yes, you can rely on the trade blotters provided by the custodian. In the event of an audit, if a regulator requests specific trade blotters, you would just want to download them off the custodian's website for the particular clients and the dates and provide them to the regulator.
Great question. So we'll go ahead and move to the next one. This one is from Bill Hines. Please clarify what responsibilities I have for one-time service folks, i.e. retirement plan, versus those that I do AUM for. Is there any compliance work to be done for the former group after I'm done with their one-time service?
Excellent question. So, Bill, it sounds like you may want to have ongoing clients where you provide a service for an extended period of time, the subscription model, and you work with clients for an ongoing basis until they terminate with you. But then you may also want to have just a limited scope or a single engagement plan. That is totally normal. When we describe your limited scope one-time engagement in the ADV and then in the client agreement, we make it very clear that upon delivery of the project or delivery of the plan, that the engagement is complete. There's no support afterwards. Any further service or afterward support would be billed according to your regular fee schedule, whether that's an additional project or hourly. So it is definitely possible to work that into your documents.
Excellent. Thank you for that. Next question is from Matthew Fitzgerald. Is it possible to charge performance-based fees?
Excellent question, Matthew. It is. I have been involved in the drafting of over 300 ADVs, and I have done two where we have done that for an XYPN member. There's been some additional disclosures in the ADV, but we have successfully done that, and that is allowed within membership.
Excellent. Next question from Michael Hathaway. Does the net worth slash bonding requirement apply if assets are custodied at Schwab, for example?
Excellent question. So this depends on your state. So there's a couple variables to consider here. Some states will require a minimum net worth requirement in general, regardless of whether or not if you manage assets or not. Other states will have a minimum net worth requirement based on whether or not you have discretion. And then there's also generally an even higher net worth requirement if you have custody. We see very few XYPN advisors who have custody because of the additional regulatory responsibility and high net worth requirement. So if you are using Schwab as your custodian, it's just going to depend on whether or not you have discretion or non discretion and what the requirement is of your state.
Awesome. Kendra is on fire, people. Keep them coming. All right. So for Matt Pruitt, hey, Matt, I'm midway through the registration process and have refined my thinking about my fee schedule. Is there any issue with changing my fee schedule immediately after approval from the state?
Mm, that's That's a really good question. So I'd like to provide just a little bit of background and then I'll actually answer the question. So once you engage with our team and you give us an idea of the services and fees you want, we'll draft your document for you and we'll do our best to get the language in that supports what you're trying to do. I often ask advisors that I'm working with if they have another ADV that they really like the way those services and fees are described, or maybe they have a spreadsheet for how they want their ADV to reflect their fee model. Once we have your fee structure as best we can, as best you think that that's how your firm will look on day one, we'll submit it to the regulator. The regulator will scrutinize the way that services are delivered and how we bill for those, and they may want us to make additional disclosure requirements, or they may want us to provide more details about negotiation or complexity of fee arrangements. So, once we get your ADV approved, at that point in time, the regulator has approved what you're doing. Thereafter, any drastic changes to your services and fees may or may not constitute an additional review by the regulator. It's not uncommon for us to do some minor fee changes. Maybe after a couple months of being in business, the advisors realize that they didn't charge enough. And so we just have to do some increases. But if there is a big drastic change, it could prompt additional review from the regulators. We don't really have a good understanding of if they randomly pull ADVs for review or how that works. But it is possible for us to do a big change to your services and fees. But I would say we'd want to do our best to get your services and fees initially for how you intend to offer them.
Excellent. Thanks again for that question. And then another one that was upvoted is from Scarlet Nightshade. Registering initially as a sole proprietor and then moving to an LLC slash S Corp when there's enough traction. Is that something you've seen before?
Mm, Good question. So, a couple considerations there. First and foremost, we recommend talking to an attorney and/or an accountant for as you're determining which legal entity you create. As you know, that if you decide to become an LLC, you will want to register that LLC with the Secretary of State. And those filings do become public once the Secretary of State approves your LLC formation. For that reason, we sometimes do see advisors begin as a sole proprietor just so that their business entity isn't searchable. Regardless of what your initial entity is, if you decide to change it, perhaps changing it from a sole prop to a LLC or an S corp, a corporation, it's not a hard thing to do as far as the compliance documents read. We simply update your name on your ADV, your client agreements, and we submit that as an amendment to the state.
Excellent. And it looks like Scarlett did have another question from earlier. And this one is de minimis exception. Can you elaborate if clients are outside advisor state? Does it apply per state? Does the advisor need to be registered in home state if they're within de minimis?
Very good question. So you will want to be registered in your home state first before you can get clients anywhere, whether that's your state or the outside states. So let me give you an example. I'm located in Montana. Once I become approved in Montana, I can have up to 5 clients or 5 households in Idaho before needing to register. I can have up to 5 clients in Wyoming before needing to register. I did say Louisiana and Texas are the exceptions, so I would need to register there in those states before getting a client there. And a client, for purposes of counting your clients, a client is someone who has a client agreement signed within the past 12 months. So if you just have those limited scope or a single engagement with a client, they would be considered a client for 12 months after completion of the project.
Yeah, that was really helpful information. Thank you for that. And I'll start back at the bottom. We did have some questions submitted about 15 minutes ago. So we'll start just from the bottom again. This is from Monica Youngman. What is the cost for compliance support?
Excellent question. Initially, for the initial registration process, it is either $1,500 or $2,500. The first one is our standard initial registration, and we can generally, in most states, get your firm registered in 8 to 12 weeks. We do have our expedited registration, which is available, excuse me, for 2,500. And in most instances, not all, but in many instances, we can get firms registered in 6 to 8 weeks by speeding up the process initially of your document drafting and submission to the regulator. And then after your firm is approved, we have our a la carte single engagement services. A premium ADV update would be used when you want to update your services, update your fees, maybe add custodians, change outside managers, sub-advisors, TAMPs, those kinds of things. And in that process, we file the ADV amendments for you and we update your client agreements to match. And that's a $300 service. We also offer hourly consulting at the rate of $300 an hour. Hourly consulting is often used if you want us to review your website, maybe review marketing material or performance advertising, or just want us to really dig in depth with you to create an outline for your compliance program. And then we also have compliance coaching, and this has been more and more popular. We have a couple different options available, and they range from $350 to $600 a month. And the reason for the range is because it depends on how much support you need, how much contact you need with a member of our compliance team, whether that is weekly or monthly calls or monthly emails, or it could be just quarterly. We often see that advisors may start off with monthly calls as soon as they're registered to set themselves up for success. They build their compliance program, get themselves on track, and then after that, they might drop down to quarterly or semi-annual calls. But those services range between $350 and $600 a month, just depending on the level of support you need.
Great. Thank you for covering what's included and what's not, Kendra. That was helpful just to get that perspective. Back to the bottom. This is from Eric Ross. What are the retention requirements for text messages and email? Does it differ based on state or SEC?
Very good question. No, it does not differ. So Our developers here at XY, they have created a platform called XY Archive that is designed specifically for advisors, and it will archive and keep track of all of the good stuff that you need to be responsible for keeping. In general, if you are offering specific investment advice or directing your client to do something very specific, that needs to be archived. If you are simply chatting with them about scheduling a meeting or doing something that isn't specific to their situation or something that they need to act upon, that does not need to be archived. So, as a best practice, we recommend not sending specific investment advice or specific instructions by text. Rather, if you're going to do that, send it by email or even better, hop on a call with the client. So, not everything needs to be archived, just specific guidance, specific instructions.
Perfect. Thank you, Kendra. And there's been several questions asked here. If this will be recorded, and yes, you all will be sent a recording of this webinar today. So yeah, just keep a lookout in your inboxes for that. And then there are a couple questions that have been upvoted by folks. Back to Eric Ross. Are there any restrictions as to what can be discussed with potential clients before registration is approved? For example, when can the firm begin soliciting interest from prospective clients before the registration?
That is an excellent question, Eric. Thank you for bringing that up. And this is a very, very sensitive topic. So, you you may not begin advertising for your new firm until the regulator has approved you. And advertising can take a variety of different venues, right? So it's okay for you to purchase a website or a domain to reserve the social media sites, but you will want to keep anything on those sites under construction or private until your firm's approved. We often hear that advisors are they're so excited that they have this new business in the works, and you may or may not be with the current firm, but the technical answer is that you cannot start advertising. You can't start telling people, prospects, current clients, you can't tell them that I will be starting my own firm, because that could be perceived as advertising by the regulators. Things that you can do: you can tell people that you have joined XYPN. You can tell them all about what XYPN does, and how XYPN helps fee only financial planners start and run their own business. And you can be proud of that. You can say it because you're technically not yet advertising for your firm. But it's a fact what XYPN does. You can also say things very vague, like, "Oh, I'm working on some exciting things, but I'm just not at liberty to talk about them yet." You just have to tread lightly and be sure that you're not advertising for your firm or soliciting clients.
Yeah, touchy subject. So thanks for clearing that up, Kendra.
Yeah, of course.
Um, And we'll just go to a couple of these upvoted ones. Monica Youngman, can you describe what is in the 15K initial estimate of capital needed for startup?
Mm. Um, yes, if Chris hasn't already put that document in the chat, that would be wonderful. I recommend downloading it. There's a couple tabs on there. Among other things would be creation of your business entity, perhaps getting some marketing in line, like your website, paying someone to develop your website. You will likely want to get E&O insurance. There are ongoing fees. You may have a bookkeeper or you may have some legal counsel to help you with the process. There are XYPN membership dues. And then there's also loss of income while you are going through the registration process. If you've chosen to leave your job, before you begin the registration process, or if you've worked up until the point where your firm is approved, you may have some temporary loss of income while you are onboarding clients into your new firm. Chris, you're welcome to chime in if I've missed anything else.
Yeah, absolutely. And it's always going to be subjective to the type of practice that you want to build, right? If you want to have a home office, obviously you don't have to worry about renting out an office space. So, technology, that's another one. Also, just want to make sure you're accounting for personal expenses, right? Paying mortgage, do you want to buy a new pair of shoes, groceries, and whatnot? So, it really does depend, but typically we see our members, they can get up and running at as lean as around 15K in that first year. So I'll publish that. And a question from Bill Hines that was upvoted. Is the 5 clients in each state before registering only for AUM, ongoing clients, or does it also count for one-time services?
Good question, Bill. That counts for any client, regardless of whether they are AUM only clients, financial planning only clients, or just a single one time service. Every time you have a client engage with you, whether it's an ongoing relationship or just a one time engagement, they sign a client agreement. And from 12 months from the completion of that agreement, if it's a project based, they are a client for de minimis purposes.
Awesome. One more upvoted, or there's a couple more. So from Gary DeSoto, is registration for any state required if the only service to be provided is financial advice / coaching? If registration is not necessarily required, what is the benefit to registering? Once registered, can a financial coach / advisor who does not provide investment management be based overseas or just be physically outside country? So, I'll grab that one for you. There we go.
Lots of good points there, Gary. So regulators are actively trying to find folks who are doing activity that would require registration. In general, the activities that require registration is anything related to providing investment advice, but also financial planning advice. And so it's kind of a blurry line between financial planning and financial coaching. And in general, I like to describe financial coaching as being basic educational tools, working through or possibly providing blogs, providing basic templates, helping with budgeting, financial planning, cash flow, debt analysis. It's fairly basic, and financial planning would be more being very, very specific, making recommendations that the client would act on. So there's not a huge amount of guidance from the regulators on financial planning versus financial coaching. But if the regulators or anyone was to find that you are offering a service for which it would require registration, that could be a problem. And this is somewhat state specific. If you wanted to find out exactly what your state wanted, I would simply Google, for example, Montana investment advisor definition, and I would find the activities that require registration versus the activities that don't require registration. If you truly are offering just financial coaching and that doesn't meet your state's definition for what requires registration, I would just recommend being very, very careful to not blur those lines. So being familiar with what your state will allow. And
Great.
then can investment management be based overseas or just be physically in outside countries? If you are marketing to people overseas, that would depend on the country in which you're marketing. And we don't have a lot of support available for countries outside the US. If you had a client who lived in the US and then they moved overseas, but you weren't actively marketing to that country, that would be fine. You could continue to keep them as a client.
Great. It looks like we have time for a couple of more. So, Natasha Hamilton, I know these were asked a little bit earlier. Do you help with filing as a foreign entity when registering advisors in another state?
Good question. That happens often where an advisor who is approved in Montana, for example, I also need to become approved in Idaho. So first I have to register with the Idaho Secretary of State that my business will be doing business in their state. And we don't do that for you, but we have done enough of those where we can navigate the Secretary of State for that other state and get you pointed in the right direction for how to do that.
Great. Thank you. Another one that was asked earlier from Jamie Block. Do you have attorneys that you recommend to look over employment contracts?
Mm. We do recommend a securities attorney because securities attorneys are more versed in RAA and IAR documents. There is a particular attorney in the network. His name is Chris Stanley, and he has two firms. He's a lawyer, and so he has his legal firm, and then he also has his own RAA. And our team consults with him when we have securities questions or securities issues, and we pay him. And he's our first recommendation for members also. And he's very quick, he's prompt to respond to XYPN members who have questions.
So, yeah, Chris is a great resource. And there is two more questions, so hopefully we can get through these. One has been upvoted, so I'll go with that one from Mark Farrell. For ongoing financial planning, does a deliverable constitute giving the client a paper document?
Mm, good question, Mark. And it really depends on what you want to do. Um, it's going to be your ADV and your documents. So we will tailor them to what you want to do. If you don't want to actually provide a paper document to your clients, maybe you're using financial planning software where you'll provide access or a portal. We simply indicate that in your ADV. So we really want to tailor the ADV for what you'll be delivering to a client. If you know that you will not be printing off and providing a piece of paper to your clients, we'll definitely take that out because in the event of an audit, the regulator is going to want evidence that you're following your procedures, what you say you'll do. So we don't want to have anything in there that you're not actually doing.
Great. And then hopefully we can rip through this very last question from Andy Moran. Can websites be online, etc., with disclaimers on the bottom that approval is pending while waiting for regulator approval?
Mm, good question, Andy. And I would highly discourage against it. Regulators will probably still find that. They're going to Google you and your proposed firm name, and it's likely that they would perceive a live website, even with a disclaimer that you are already advertising. We have had a couple instances where regulators have found these during the review process. Um, when I start working with advisors, I immediately Google them. I look at them on LinkedIn and I try and find any evidence that they are advertising for their firm so I can caution them, recommend that they shut that down for a couple weeks. But occasionally some slip by. And in instances where the regulator has found something and they perceive that it's advertising, they they haven't brought down full cease and desist to turn those things off. but they've asked a lot of questions and they want you to explain, or they want the advisor to explain why this isn't advertising. And it just gets really messy and it delays the process.
Great. And we are at the top of the hour, folks. So thank you so much for joining us today. I know there was a ton of valuable information. I learned a lot, and I really hope that you folks did as well. And as you're exiting the webinar today and you click back to the lobby, you will see a feedback survey pop up. So we really would appreciate if you could take a couple seconds to complete that. We'd love to know what you folks thought about the webinar. Again, thank you so much for joining us today, and we really hope to see you guys again next month.
Thanks, everyone. We hope to work with you soon.